Bitcoin Technical Analysis. I'm your host, your pal, your pally host, Rocky Outcrop. I hope you're all doing really well out there, and I hope you choose to hit that subscribe button and join me daily here for technical analysis for not just Bitcoin, but Chainlink, Tezos, and Ethereum as well. There's two things that you can talk about if you want to narrow this down here in today's episode, and that could be the content of this box here, which tells you all of the sort of your price targets, your profit taking targets, all the rest of it. Not a financial advisor, not financial advice, but that you can read that at your leisure, hit pause or whatever if you want to. Of course, subscribers know we've been talking about that for a while. And instead, let's just talk about the notes that we have for today's episode. Try and keep things nice and neat and simple enough, shall we? So, of course, the date today of filming is June the 18th. These episodes always last for more than just a day, but whatever. Let's acknowledge the title first off. So, are we breaking out of the rising wedge with an incoming dump, massive dump on your face, coming instantly, instant mashed potato dump on your face? I'm not sure what the title will be. I don't know if I'll mention mashed potato or not, probably not, but I have to acknowledge it, because it's clearly clickbaity, and there is a reason for it, okay? So let's just be clear about this. The rising wedge line that we've had on the charts for the longest time has eventually got to this point where the daily price action is potentially, coming up to a point where it could break out of it. The current price is 9,425, but just as I was writing the notes for this episode, it was down here, kind of challenging this white line at the 9,400, let's call it, area, where we had the confirmation neckline area of certain psychological type patterns on the chart before. And yes, so that's where it's kind of coming in at. It was coming in at and asking these questions. Now we have the sort of the intermediary sort of minor fake out zone in this little sort of triangular shape just in here, you could say, first off, and then you've got the bigger sort of fake out zone, I suppose, in a way here, and it's maybe that's unfair to call it fake out zone because at the bottom of it you've got 618, which of course could be a profit taking zone for a full move for some people, but then the reason I'm calling it fake out zone as well is because that's where the 236 comes in at, just in here of a bigger Fibonacci, and that would make that valid going past that, but coming right up to it and then turning around again, as we saw just the other day there, would make it seem fake outy-ish or whatever, and I just want the language to be understandable for folk. So where am I? Undo that. Where are my goddamn notes? Where have I hidden you? Where have I hidden your notes? Come back to me. Okay, yeah, so really, I've acknowledged the title now. The question, are we breaking out of it or not? I think it's a little bit much to say that we are just yet, until such times as at the very least you go into the 9,300s, but really you're looking down to the 8,900s to really be able to say that you definitely are. There's obviously areas in between like 9,100 and stuff like that, and we have our we saw them a minute ago, the price target ones that are already kind of lay it all out for us. But, the volume here, it's not exactly anything to write home about currently, so it's not like breakout type volume. If we go over to look at a couple of different charts, you can see the CMEs, very much, plenty of time left in a big symmetrical triangle there. Not really the same sort of chat. Here on, what's this Bitstamp? I've got this white line here, which is really put on there just to kind of show the concept of the rising wedge from the Coinbase chart that we've been using. But as you can see, you can kind of just ask a couple of questions there about its positioning and whether or not that's a fair assessment or not. Over here on the BitMEX chart, you've also got the same sort of a line coming up the way, asking the same question. It's a symmetrical triangle here, but of course I can just adjust this, and there you've got a rising wedge, and we're not quite there quite yet, but I'm going to keep that as the title anyway, because the way that we had this one positioned on here is indeed that. Now, right, the beat goes on. Therefore, it really, I think, is the summation of that title acknowledgement point, really, until such times as it doesn't. Of course. Now we can look as well. Wait, are we breaking out the rising wedge? Might be a bit premature to say so. Really, we've made it through most of the notes already. Great, episode will be done in a nice, orderly fashion today. But actually, let's just take a look. When we say it might be premature, let's just take a look at a couple of things, like what happened in yesterday's episode. We were talking about the 1 hour breakout imminent, and we had the symmetrical triangle drawn in. Let me just, oh darn, let me just get rid of this other pink line here for now. Um, we had this symmetrical triangle drawn in with these two pink lines, and you can see that we're actually, post filament, I think we went up to these highs up here, then on down again to these lows down here, then on through breaking out from this area, and in fact, would have got the measured move, I suppose, off the back of this triangle here. Yeah, got the full measured move here. Obviously the wick went on down a bit further. You can measure this various different ways, but in terms of Bulkowski and the bodies looking at where it closed, then you got this sort of it more precisely there with that. So interesting, that was good. That was some good technical analysis yesterday, even though obviously I disdain the lower time frames. But there you go, and that was a good a good sort of explanation for how you can do those things yourself. Good, you can watch yesterday's episode if you want to see how that all came together, of course. But I just want to help you have the confidence to do these things, because understand that there's a divide between watching some technical analysis on YouTube and then actually trying to go and do it yourself. And I want to try and just help address that with these sorts of things and let you kind of see it being walked through a little bit, so that you can do these things yourself. Let's just have a quick look then at a couple of moving averages here at the low time frames. The 10, which is the red dotted line, and the 21 EMA. They are just 10 simple and the 21 EMA. They're right on top of each other on the 1 hour time frame, up above our heads there. That could be your first port of call to look to in terms of top side resistance to come up and challenge the rising wedge again, and can we move up above it and all that sort of stuff. And then of course this line here at 9393, let's call it, for the downside of those ones, with the 21 and EMA and the 10 SMA giving us a couple of tips there. Okay, 2 hour time frame, exactly the same scenario really as well, with the positions of those moving averages. Going on up to the 3 hour, actually skip that, go to the 4 hour. You can see that maybe perhaps the 21 and the 10 are right on top of each other here, and they're right at the top of the price action as well. We're kind of challenging them from time to time, but not really succeeding quite yet in terms of those candles here. In terms of the 12 hour time frame, we have the 10 simple just below us, the 55 just above us, and in fact the 21 up there at 9485. I believe that's where it is on the 21 on the 24 hour time frame as well. So that's kind of our straddle at the minute. If you're looking towards this 9445 area for breaking back into the rising wedge, then of course the 9545 area for sort of profit taking thereafter. And if we go up to the 24 hour time frame, then we can see quite clearly that the 21 EMA, yeah, it's in the same place as on the 12 hour. 10 simple up above us as well. That's the area to kind of look to as well for can we actually challenge this and maybe make some sort of move towards the top side and extend the lifespan of this thing for forever, or will we be asking more questions about the sort of two big fake out territories that we already identified? Now, if I want to do one last thing in this episode, then what would it be? Well, I like to draw a little comparison, and this might be something that might help you when you're trading as well, and you're doing your own charting. Is to make this question now on the 24-hour time frame. I have this purple line here, and if I just plop it down on top of our blue serrated line, and then look to these areas, you can see that maybe this is like an ascending triangle, right? We've got this upward sloping resistance here, support or profit taking, and we've got this horizontal sort of resistance or profit taking line that you could call it here at this sort of mid 9500s area. So and we're forming this ascending triangle, and we're quite a way into it as well. It's quite a small one, but we're quite the way into it, and we could see a breakout from this thing coming. Now, if we were to break out towards the top side, as these things are often want to do, and you did the sort of Bulkowski style effort with it, then you would find that you'd be getting that resistance coming in again in and around that 9800 area, where you potentially up at the 9850s, wherever another profit taking line. Of course, quick shout out to the white writing again, wherever it's hiding there, with our targets. Ah, darn. And yeah, so there's that. But I also wanted to kind of show how that looks on the lower time frames, just so you can kind of get the sort of the concepts in mind here as well. That this is obviously broken out of the lower side of that there a couple of times, and is currently existing underneath it. Whereas on the 24-hour time frame, you can see that it's not, that, well, obviously, we're asking questions here, that that we're above it, low time frames. below it, you know, and asking sort of slightly different questions about things. And there are things that you can do to be more informed, like look at the oscillators between this low and this low, which is this low and this low over here on the 4 hour time frame. If I bring this up, you can see that this is ever so slightly higher, you know, ever so slightly higher on the 4 hour time frame than the previous low, which was of course part of a downtrend, let's just call it there. So there was a little bit bullish divergence which led up to this, and we now got a higher low coming in here. So can we then turn around and get this move towards the top side? And that's how I would bring these things into the context of that there. But looking down towards the 1 hour time frame and looking at these lows, low here, low here, low here, low here, whatever, and asking questions and saying, well, you know, it's not actually bullishly divergent on these really low time frames, just here, you know, on the way down to where we came from, where you can see quite clearly overall like got this sort of downward trend here in the 1 hour time frame up to that point. You know, not a super long lasting one, but there it is. So you can build these things in here. It'll give you neither of those. That's not, you know, you could maybe take confirmation bias from the 4 hour bullish divergence. Then you can sort of undo that by looking at the 1 hour and say that it's not quite there. And just bear in mind, you know, the fake out territories and whatnot that you've got in terms of all the different profit taking targets. And you know, that might help you build up your own picture. Now, I'm deliberately not, you know, putting any sort of real emphasis on either direction of a breakout, just to remind people, actually, as I say this, I'll drag this down to this side, and you could be looking at where we've seen the wicks come in at quite recently here, down at 9200s again, easily enough, just in terms of this triangle here, before you start asking other bigger questions like, are we going to come in for a higher low, etc., or whatever. So I don't want to put any sort of real emphasis in either direction for people there with that one, so I hope I didn't do that, but I did want to give you some sort of extra little tidbits of information that might integrate with your own technical analysis, make things a bit easier on you and all that. About 15-minute episode or so today. That's okay. I think that justifies it with the clickbait title that I'm going to go for, I reckon. And yeah, thanks so much for tuning in. Really do appreciate it. I hope that I help with your confidence levels when it comes to your charting, and I hope that you choose to tune back in again for more of this technical analysis. Because we do these episodes daily. And of course, yesterday's 1 hour stuff was a bit of a laugh. You know, I don't do it, but I did it across the board, and we saw it play out for us. And you know, there you go. You could have made some moves off the back of that, but I'm not a signals guy. Instead, I want to try and help people become more proficient and self-reliant. Actually, great. Thanks so much. Catch you next time.